Hello guys, this is a pre-market analysis of 5th of June and it's a Friday. So normally I don't do pre-market analysis on Friday because I wake up late. I don't trade much on Friday. But today it's a very important day, RBI policy day. So we will have to do the pre-market analysis. And in this video, I'll talk about what we can expect in the monetary policy meeting, and then what can be the outcome. And if this is the outcome, then what you need to do and all those possibilities. What are the possibilities and how you react to each of that possibilities is what I'll be discussing. So watch this video fully, and in case if I'm missing something, you can also contribute on the comment section so that it will help me and it will help others also. So right, see, again, market is not looking about the interest rate only when it comes to today's monetary policy. There are people who are talking about there can be an increase in interest rate because of the future inflation expectation, and majority is saying that it won't be. But beyond interest rate, we need, or the market actually looking for answers for inflation outlook, because monsoon is weak, very important, right? And then war issues there, so forex issues there, rupee depreciation is there, and current account deficit is widening. Crude oil prices definitely increased, and in our market also it is getting reflected, and that is adding to the prices also. So if crude oil price is increasing, transportation cost is increasing, and if monsoon is weak, then that is also going to add to food inflation and overall inflation in the upcoming days. That is visible now itself. Along with this, if you look at the fertilizer, that also getting affected, almost 50% increase because of the war, because it's again import based, and we are completely 100% dependent upon import on fuel, and to an extent fertilizer, the components, right, the raw materials. So market is looking for answers for inflation outlook, GDP growth outlook, and rupee depreciation, impact of US-Iran conflict, not the short-term impact. How now still we are yet to see the actual impact, right? More than US or Iran, we are going to get affected badly in the upcoming days if it is just going like this. An impact of this weak monsoon condition, that's the prediction this year. Right, last year we got saved from inflation because of big good monsoon, but this is not the case this year. An RBI strategy going forward. So market is definitely looking for the answers for this beyond interest rate. So if normal, monetary policy committee or meeting, if you see when the governor is talking about interest rate hike or dip, you get the big moves. But today market is looking for the commentary and, his answers on all these. And based on that, moves will be possible. Now, if you look at the interest rate, the current RBI repo rate is 5.25, and majority analyst, if you see, expectation is 80% of the analyst, there won't be any rate change, status quo will be maintained. But some analyst is expecting 25% hike because of the future inflation expectation. So now itself, you need to start controlling that. That is what some of the analysts are saying. Now, why this meeting is important, I'll talk about that. So I hope you understood the questions that need to be answered. Now, the commentary is important. It's not just about the interest rate. They may hike or they may keep the status, but they are not going to reduce for sure. For reduce means the market is going to be super positive, but that's not going to happen. They possibly can hike. In that case, it is going to be negative, but I don't think that at this point when the market is already weak, they won't do that. And during the commentary, again, they have to make positive commentary. Otherwise, also market can go down. So it looks like status quo will be maintained and somewhat a positive commentary will be given related to the solutions on rupee depreciation and everything. But it has to be taken care properly. And we will have the live market trading sessions. And if you are interested, you can join us, right? So again, let's start with the first issue, US-Iran conflict. So if the conflict continues, oil price may remain elevated and inflation pressure may increase. And definitely the market want to know how are they plan to deal with such scenario. Secondly, weak monsoon. So the market is looking for RBI's assessment regarding below average monsoon expectation. So since weak monsoon, if it is coming, what can happen? Our agriculture is completely depending upon monsoon. So if monsoon is weak, then we are finished. The food inflation will increase, right? Last year we got beautiful monsoon, so food prices was less. There was no inflation, and that controlled the overall inflation also, because majority of the main component in the inflation is food inflation. Now food and fuel inflation, which is the core inflation, that is very important. That is having the major part. Now food is not in our control because we are completely relying on monsoon. So if monsoon is bad, we are definitely going to face food inflation. Fuel inflation, fuel, not in our control. So what RBI is going to do, if food and fuel is not in your hands, what RBI is going to do with respect to monetary policy, what the government is going to do with respect to fiscal policy, you have nothing to do. You have absolutely nothing to do, because you are completely dependent on monsoon. You are completely dependent on the import of crude, and if that price is increasing, and if monsoon is not there, the food prices will definitely go up, and the transportation cost will definitely go up, and for the fertilizers also, for that raw materials, you are dependent on that, and for sulfur and all these. So that also price is hiking because of the war. So in all ways, you are going to see a potential future big inflation, right? And what is going to be RBI stand on that? Then third, rupee depreciation. In 2026 alone, rupee have depreciated almost 5-6%. So you don't want to even, that is a fixed return, fixed interest, fixed investment, fixed deposit return, actually 5-6%, but it's just halfway in 2026, right? So in half months, you are getting, if you simply buy dollar, you are getting more than what fixed deposit can give you. So if this continues, right, in 2026, if there is a weakness of 10%, then what FIIs are going to do? Who will come and invest in India is again a bigger, who will trust India in that case? Because the moment you come to India with Forex, and you take it back after 1 year, eventually you will lose 10%. Forget about the gain or loss that you make here and the taxes that you pay here. With rupee depreciation itself, you are losing, right? And since the last monetary policy committee meeting, if you see, rupee have slided almost 2.5%. So out of this 5%, so the market definitely want to know whether RBI intend to, actively support the rupee or not. But of course, RBI have limitation, because we are not like China. China, it is devaluation, revaluation. They can devalue, they can revalue. The central bank can do that. But in our case, it is a market which decide. It's a floating. So what the best RBI can do is pump in more dollars, so that liquidity can be created on dollars, so rupee will appreciate. But the question is, do we have that much Forex? Especially when the crude price and everything is going up, Forex is leaking. That way also Forex is leaking. So RBI definitely have limitation. Okay, now the swap deal and everything, but it also have limitation. With some countries, if with Japan we have the swap deal, we can do the trade in rupee or whatever, or exchange of commodities we can do to save this. But still, there is a limitation. So what is expected RBI communication? The expectation is that RBI may continue with a wait and watch approach. Whether it is geopolitical risk or inflation risk or monsoon uncertainties, that is a possibility. And see, they cannot reduce the rate. Market will already at the brink of collapse. At the support 23,200, it can fall deep, steep. If they cannot give negative commentary also, in that case also, it is going to be finished. So they will have to give a positive commentary by maintaining status quo, wait and watch. That's the only thing. See, practically think from RBI, monetary policy committee members' perspective or RBI governor perspective. Or can I come and give a negative commentary when the stock market is testing that support of 23,200 and market is not giving any such returns for the last couple of years? No, we cannot. Can I increase the interest rate at this point of time by expecting a future monsoon later and leading to a market crash? When everything is negative also, no, I cannot do that, right? So if you see previous RBI inflation projection for the current financial year, it is around 4.6%, and if you look at April inflation, it is 3.8. So what market is focusing is, if RBI revise the inflation project upward, then market may interpret it negatively, right? So RBI, if from 4.6, it is upward revision is there, if there that can be there, right, then that will also be taken negatively. Previous GDP growth projection was 6.9. If that is revised to down, then also it is going to be negative. So this is a point that you need to keep in mind. Now, there is an interest rate differential issue. The current situation, if you see, US interest rate is 3.5% and India interest rate is 5.25. So there is a differential which is approximately 1.75. And historically, if you see, India generally benefit when the differential is close to 2.5%. So a wider differential actually help to attract the foreign capital inflows. Why? Because when you have this at least 2.5% difference, now simply you can borrow there at a lower interest, you can invest here. You got my point, right? So when there is quantitative easing there, and when we have a higher interest rate here, right? So what can happen? FIAs will be attracted, but 1.75, I don't think that they will do. But generally, when you see what I have seen, what I have observed, what I have read, and what my knowledge, according to my knowledge, this is what, when you have a higher difference, then only I get benefited, right? Or I borrow from person X, or if I need to, if I get mutual fund return of, let's say, 35%, 30%, assume if I get 35%, then can I take a personal loan of 10 lakhs at 14% and invest in mutual fund if I get this guaranteed? In our case, if it's in when you're RBI giving this interest rate, means in terms of bonds or in terms of fixed deposit interest or whatever, that is surety, right? So if I'm sure I get 30% here and I can get personal loan of 14-15% here, why I need to do anything else, right? I just borrow here my personal loan, 10 lakhs, just invest here. I'm sure about this. From this, pay 15%, rest 15% keep with me. Simple. So that way, FIIs will get attracted if there is a differential of at least 2.5%. So in that way, also RBI can think, if not today, maybe in future. So in that way, it is actually good. Sometimes an interest rate hike is also good, but it need to be interpreted very clearly and very carefully. I hope you got my point. So here, normally I tell interest rate hike is not good, but sometimes when interest rate hike, when there is a differential, it can be good for FIIs. It may not be good for domestic investors. At the same time, domestic demand may come down. At the same time, domestic production will come. Demand is coming down means production will come down. So growth may come down, but it can attract FIIs. Very carefully you need to interpret this. Don't comment like interest rate hike and market goes up. No, I'm not saying market goes up. I'm just saying it is potentially good for FIAs because you are getting money at a lower rate at your place. You can invest here at a better interest rate. Simple. That's the only point I told. But I never said this interest rate hike is good for domestic market or domestic economy or domestic demand or domestic growth. It is bad. That is why you're not doing it. Right? So that is an offshoot. What are the possible outcomes? See, one possibility, the FCNRB deposit scheme. This was previously introduced in 2013 Tapper Tantrum. And how it worked, basically NRIs can deposit foreign currency with Indian banks and the money remain in foreign currency and it does not expose the depositors to rupee depreciation risk. So that is one way. Otherwise, normally if you are an NRI, you convert that and now invest in rupee. Then if rupee depreciate, despite you get 6%, but rupee depreciate and you lose that. But here, this can allow you to keep it in the same foreign currency. So rupee depreciation risk may not be there. Now, why that matter? Because you can increase the dollar inflow, forex you will get, rupee can stabilize. There is, availability of dollar and market sentiments could improve. So that's something which may be possible. Apart from that, the Middle East update, if I want to give you, Israel-Lebanon ceasefire, right? Israel and Lebanon reportedly agreed for a ceasefire agreement, which is again positive. But the ceasefire we have seen many times and that remained fragile. The condition is that the Lebanon is expected to remove Hezbollah operatives from certain areas near Israel. And Trump also have made some statements that, a US-Iran peace agreement could potentially happen during the weekend. So the Iran's position is Iran's foreign minister have confirmed that discussion with US are continuing. Negotiations have been going on and it's not terminated. So actually that is directly contradicted the earlier reports that we discussed that negotiations have stopped and all, right? And as a result, you can see crude oil have fallen almost 2%, right? And the current level, if you see, WTI is around 93, Brent is around 95. Not, yeah, 2% fall is there. And US market also, okay. Dow Jones is up around 1.7, S&P is also up, and Nasdaq have mildly closed positive. That is because of the semiconductor weakness. VIX have also fallen and dropped below 15.5. That is looking good. And GIFT Nifty at one point moved to 23,600. Now, at this point of time, when I'm recording this video, it's around 23,560. So it is indicating 50 to 70 point gap up opening, mild positive opening. And with respect to ADR, Wipro is the only major ADR which is looking negative at this point of time, and that is regarding this. There is a news flow regarding a harassment complaint, but I'm not sure about details. And if you look at HDFC ADR is strongly positive. ICICI is very good positive. Infosys is also looking very good positive. So all the three is indicating a fresh positive price action and positivity. Yesterday, I told you FIIs were net sellers. They sold for 4,500 crore. DIIs bought equally 4,400 crore. And see, the points that I want to discuss is oil price have corrected, looking good. Israel-Lebanon ceasefire, possibly good for the market. US-Iran discussion is continuing, and Trump have made a statement weekend it can be an agreement. That is looking good. US market as a result is looking positive. VIX have fallen below 15.5 in US market, which is good. Banking ADRs are strong, which is positive. Infos is also positive. And RBI can announce some supportive measures if they have to do it. These are the positive scenarios for today. Now, what are the negatives? Still, FIIs are selling, rupee depreciation still there, inflation risk for future is remaining, growth concerns are there, and RBI can adopt a hawkish tone potentially. Technicals I have discussed yesterday. Open interest, if I see, call options maximum is at 24,000, followed by 23,500 and 24,200. And maximum new call rating is coming at 24,200, which is potentially indicating an up move and bullish scenario. 24,000 also, 23,800, which is normal, which is a initial first resistance. Put side maximum at 23,000, so broader range is 23 to 24. And after that, 23,300, 23,400 is there. So option-based view, if I need to take the broader range is 23,000 to 24,000. A shorter range is 23,200. We have seen couple of days, last 2 days also, last 3 days, it took support at that 23,200, 300 level, touching and bouncing, right? To 23,800 is the shorter range. So let's see what is going to happen. And if you would like to learn all these and trade with us live, to join our community, we have the live trading community where we trade live and I teach in the live market. So you can join us, you can talk to my team, and you can join our program. I see you there. Thank you.